Keith, I was noticing on the wall pictures of your family up there and everything. Tell me a little bit about your family.
Yeah, absolutely. Have 6 wonderful children.
6?
6.
Wow.
Tell everyone, do as I say, not as I do.
Okay.
And 2 grandchildren.
No more than 2 grandkids out of 6 kids?
2, well, they haven't gotten started yet.
Oh, okay.
They're
Your
still-
fun's just starting.
That's right. The oldest one's 30, and they range all the way down to 17, so they haven't started yet. 2 grandgirls.
How's the oldest child? How old's the oldest child?
30,
30. And the youngest?
17.
17. And the grandchildren are what age?
11,
11?
and not quite 1.
Wow. A lot of fun with the grandkids, isn't it?
Yeah. In fact, correct, that is 1, about 1 in a few months.
In about a few months?
No, she's been 1 and a few months.
1 in a few months. Okay, all right. And I thought I saw a picture of a pregnant daughter.
Have 1 expecting, absolutely going
Do
to
you?
have another baby in about February.
Well, good for you. Good for you.
Yeah, good times.
You got a lovely home here. How long have you lived here?
Not very long, less than a year.
Less than a year. Okay. Well, it's my job, Keith, when people fill out the request forms like you did, to actually come out and introduce myself to you, which I've done. By the way, let me give you one of my business cards before I forget it. Here's one of my cards. Okay.
Okay.
But I'd like to tell you a little bit about, what we do in order to help you in the future here, or even possibly today. Again, my name's Randy Lanier, and I'm a licensed broker, and we're affiliated with a wonderful organization called North American Senior Benefits.
Okay.
Now, North American Senior Benefits, it's their mission to make sure that all of the seniors throughout the United States, nationwide, are properly educated about the state-regulated benefit programs that they possibly would qualify for.
Okay.
Okay, so I'm sure that you've qualified for some of the programs, or they wouldn't have asked me to come out and see you.
Okay.
So, in getting started, learn a little bit about your family. Here's my family here. Okay, as you can see, here's my 2 boys. This is Brock and this is Josh. And of course, here's me and my wife. And this is my grandmother here, and these are my 2 granddaughters.
Okay.
Okay.
It's a good-looking family.
Yeah, and here's my home here where we live over in North Carolina, Goldsboro, North Carolina.
Yeah.
And even though I'm talking about your family a little bit, and my family a little bit, even though I'm talking about family right now, family's important in life. It's what makes our life meaningful and more enjoyable. But more importantly, if we didn't have a family, we really wouldn't have much need for life insurance, would we?
Probably wouldn't.
Yeah. Okay, wouldn't be nobody to protect or worry about. So we're here to help you learn how we can not just really protect you, but learn how we can protect those loved ones of yours from having a financial hardship down the road. That's really what it's about, isn't it?
I think so.
Yeah, okay. Well, here's a copy of my license. And we're really proud of these. And as a matter of fact, very, very difficult to acquire one. You can't get them in a Cracker Jacks box.
Yeah.
Not everybody can have one. Even there's a lot of people that attempt to get them and can't get them. And what I mean by that is, at first you have to go to school. And it's a very, very strenuous course. You have to be able to pass that with an 80 before you can move forward. And once you pass that course with an 80 or above, then you're eligible to take the state exam.
Okay.
But before you even take the state exam, then they do a fingerprint check. The state wants to be able to make sure that we can pass a background criminal check. Because you know why they do that? They have to be able to make sure they can trust us to come into your home.
Right.
You know? So when people would fill those request cards out, or any other card there, they want to make sure that whoever they're sending to see you is trustworthy enough to come out and be in your home there. That's good, isn't it?
That's very good.
Then, after that, they get to take the state exam. And they got to pass that. And then guess what? Every 2 years, we got to go back and do it all over again.
Wow.
So it's an ongoing thing.
Yes.
That way they want to make sure that, again, 2 years later, something hasn't hiccuped and burped in our lives. So that you're always continuously making sure that we're trustworthy to come into your home and speak to you. That's good, isn't it?
That's very good.
Okay. Now, this is a photograph of the Home Office of North American Senior Benefits. And our history dates back all the way to 1866. That's a long time ago, isn't it?
That's a long time.
Yeah, matter of fact, that's older than me and you put together, I think.
Yes, I think so.
Yeah. But, a strange thing happened in 1957. In 1957, they shifted gears. Instead of just being a regular life insurance brokerage organization, they shifted gears and specializing in making sure that the seniors are properly and not only just educated, but also properly insured with the right type of policies. That's good, isn't it?
That is good.
And all the rest of these years, they hit major milestones along the way. We're not going to talk about that. We'll be here all day.
Okay.
The most important thing is we've been around since 1866. And in 1957, we shifted gears in making sure that people like yourself and myself have the right kind, not only the right kind of state regulated program, but also the most affordable kind too.
Okay.
Okay. Now, we are also members of the Better Business Bureau. And I'm sure you've heard of the BBB before.
I have.
Yep. You know, some people might not have even heard of the BBB, but we see sometimes people that don't even know what the BBB does.
Right.
Do you know what the BBB does? You've heard of it, but do you know what it does?
Watchdog organization.
Kind of, sort of, yeah. They're a mediator, an arbitrator, but they also make sure that businesses are abiding by their code of ethics. And they have to make sure that if they don't abide by their code of ethics, then they either get different grades or they boot them out and they lose their membership. As a matter of fact, we have an A+ rating with the BBB. Are you aware that the BBB gives grades, A's, B's, C's, and D's?
No.
Yeah, they sure do. As a matter of fact, if you were going to have a medical procedure performed, and one doctor you're talking to graduated with A's, and another doctor you're talking to graduated with B's, which one would you select?
The A.
The A. Well, we got the A+. That's good, isn't it?
That's good.
That's real good. Okay. Now, since you filled out that request form, that request card, obviously you're seeking some information about the state regulated life insurance programs. Well, doesn't this sound like the type of organization and structure that you would want coming into your home to get you the proper information about the state regulated plans?
Yes.
Well, great. Well, let's get started talking about what we call final expense and how simple and easy it really is to understand.
Okay.
Okay? Now, before we get started in talking about the meat of the information that you requested, I want to tell you there's a difference between an agent and a broker. You know, you hear people all the time saying, I need to go see my agent about so-and-so. I need to call my agent regarding this. I need to get in touch with my agent for that. But how often do you hear somebody say, I need to call my broker?
Not very often.
Not very often. So brokers are actually a fine select group of people. There are more agents than there are brokers. However, we're a broker, but an agent, let's talk about what an agent does first off. And why we're not agents and why we're brokers.
Okay.
An agent, they sign a contract to go to work with an agency. That's why they're an agent of an agency. Understand? So on Friday, they get paid by the agency. Okay? Now, they have limited company options. For example, what I mean by that is, let's say that I work for State Farm. And nothing wrong with State Farm, fine organization. Well, let's say you came into my office seeking life insurance. But unfortunately, State Farm will decline you. Well, I wouldn't be able to help you any further than that. I have to tell you goodbye. That's not good, is it?
No.
So State Farm cannot sell Allstate. Allstate cannot sell Nationwide. Nationwide cannot sell Farm Bureau and so forth. They're limited to their company products only.
Right.
It's not that they're a bad company, but they have limited company options in that respect. That's really not good, is it?
No, it's not.
Okay. The next thing is that they have restrictions on health requirements. Well, basically all life insurance companies have restrictions on health requirements, but a lot of these agencies require you to have blood work and physicals and so forth. And a lot of times they're very stringent on their health requirements. Okay. So a person like myself, for example, I'm diabetic. And there are a lot of agencies who would tell me no just because I have diabetes. Understand? Okay. And they have limited support. Limited support meaning that if you were to call them up and really need some assistance, then you might just get an automated system, or it might not be available after hours or so forth like that. They're not all the time there when you need to access them, or if you call the office up, they'll tell you, well, we need to send your agent out to see you, or we need to have your agent give you a call.
Okay.
Well, you may need to have an answer right then and there instead of having to wait for it.
Right.
Or you'll have to wait for it with that. They also have limited assistance with other health needs, such as I've not known any agency to offer living benefits, and I'll get into living benefits in a moment. But the biggest thing about an agent is that all agents, they would like for you to have a lifelong premium. They want you to pay on that policy all the time, forever, as long as you live.
Mm-hmm.
Well, that's not good, is it?
You wouldn't think so.
No. Well, now a broker, on the other hand, they have a contractual obligation to you, the client. Okay? And so we don't sign a contract to go to work with the agency. Actually, we're appointed directly with all the different state regulated programs that we're able to offer and assist with you.
Okay.
So we have many, many, many different programs to assist you with versus just one.
Ah,
That's good, isn't it?
that's good.
The next thing is that by being appointed directly with the different state regulated programs, we can ensure the lowest possible cost to you. And the reason why is because we don't have an agency, so we knock out the agency fees.
Ah,
So our cost is more affordable a lot of times than the agencies are.
okay.
That's good too, isn't it?
It is good.
Yeah. And the next thing is we have a variety of products to meet your needs there, not just in life insurance needs, but we also are able, if you're eligible for it, we'll find out in a minute, to offer you what is called some living benefits.
Okay.
Okay? And again, I'll get into those living benefits a little bit later on in our presentation
Okay.
today. Okay? But we also want to be able to teach you how to have a paid up policy option. In other words, we don't want you to pay on the policy all forever. We want you to be able to, at some point in time in your life, stop paying on it and still own it. That's good, isn't it?
That's very good.
Yeah. Now, as a broker, okay, these are some of our AAA state regulated programs that we offer through Transamerica. You've probably heard of Transamerica before. United Omaha, you probably remember growing up watching Omaha's Wild Kingdom show on Sunday night with Marlon Perkins.
Yep.
I get mail all the time. A lot of people get mail in their mailbox all the time from Mutual Omaha. Very good company. They've been around for over 100 plus years. Matter of fact, Transamerica's been around for over 100 plus. You've probably seen commercials about Aetna on TV. You may have heard about Americo. They're the largest privately owned insurance company in America today.
Okay.
They have a longevity of years in business, over I think 75 years now.
Okay.
Matter of fact, you drink coffee?
I do.
You ever drink Folgers coffee?
I do.
Are you aware that the same people that own Americo also own Folgers coffee?
Did not know that.
Yeah.
Wow, I did not know that.
Yeah. And 5-Star, Liberty Bankers, Kemper, all under the umbrella here of North American Senior Benefits. That's good, isn't it?
That is good.
Now, also in our network are some of the B and C rated carriers, such as Settlers Life, ARP, Prime America, Lincoln Heritage, Senior Life, and Colonial Penn. And again, these are in our network. They don't get the privilege of having a AAA rating, but they do have a B and C rating here.
Okay.
Okay. Now, I didn't never ask you, but do you have any insurance right now presently?
Yes, I do.
You do?
Yeah, I'm good with that. I was calling about that dental program.
Okay, we'll get into that in a moment. Okay, but do you know how much you're paying right now on that life insurance policy?
Right off the top of my head, I think it's probably I think it's like $50 a month.
Okay, and how much coverage does that give you?
I think it's $100,000.
Really? Okay. And do you know who your coverage is with, the name of the company?
Farm Bureau.
Farm Bureau.
Oh, Farm Bureau.
Good company, yeah, long, stable company there. Do you know where your policy is located?
It might be the Lock Ox. I think it's back there.
Back there in your file cabinet?
Yeah, I think it is.
Okay, all right, you can put your hands on it if you needed to, right?
Probably, yeah.
Okay, all right. And now we want to get into the information that you actually requested. Okay, remember that little request form where you requested information about the new state regulated life insurance programs? Well, then we're going to get into that information right now. There's 3 basic, simple state regulated life insurance programs out there. Okay. The first one's called term insurance.
Yes.
Have you ever heard of term insurance?
Yes, I have.
Do you know what term insurance actually is?
No, I think it is.
What do you think it is? You tell me.
Well, it lasts a certain term of your life.
Exactly. Exactly. Term insurance, we commonly call it termination insurance, because at the end of the term of period of time, it expires. And guess what happens at that point?
Get your money back?
No. The insurance company keeps all the money you paid into it, and you got to start out all over again.
Oh, I I didn't know that.
Well, that's not good, is it?
No, that's not what I.
You know, a lot of people think that at the end of the term, it just automatically renews for another period of time. Well, that's not true. It can renew if you're eligible, but if it does renew, it renews at your new age, not at the age you were when you took it out.
Okay.
So the premium would be a whole lot more than when
Okay.
you first originally took it out.
Okay.
Now, a true statistic about all term insurance is that 93% of the people who have a term policy, they live longer than the policy does. That's why, there's one good thing about term insurance. It's a very, very affordable type of insurance. Matter of fact, there's a real good place in people's lives for term insurance. If you're a young person and you're married with a home and a family and kids, and you're the breadwinner of the home, then you would be able to take out a large amount of coverage for a little bit of money in the event you die early in life.
Right.
Okay? But for people who think they're going to live a long natural life, of course we never really know, but if you think you're going to live a long natural life, okay, then term insurance is really not the right product for you. But there's 3 different types of terms. The first type of term is called level term.
Okay.
Now, level term means that it's level. Everything stays the same. The payment stays the same, and the death benefit stays the same.
Okay.
If anybody was going to purchase term insurance, that would be the one I would recommend.
Right.
Okay. Now, all term coverage, none of it grows a cash value.
Okay.
And there's no benefits with term insurance, such as the living benefits that we'll talk about in a moment.
Okay.
The second type of term insurance is called level benefit, where the death benefit stays the same, but annual renewable term.
Okay.
Which means that every year on the anniversary of the policy, because you'll be 1 year older, the premium that you're paying, it goes up a little bit. And next year it goes up a little bit again, next year goes, so the longer you have it, the costlier it becomes.
Okay.
Well, that's not good, is it?
No, it's not.
The last type of term is called a level benefit, but with a 5-year arm, which means that each year it goes up a little bit, but they don't change your premium but every 5 years. So
Okay.
most people that have that type, they're really not aware of it. They wind up paying a premium for 5 years and they forget about the 5-year arm, and all of a sudden they get hit with a big whopping increase after 5 years. That's not good either, is it?
No, it's not.
Okay. Well, that's what term's about.
Okay.
Okay. The second type of state-regulated program is called whole life.
Okay.
Now, whole life is actually the only type of insurance that you can purchase that's guaranteed that your beneficiary, whoever it may be, will have a claim check upon your passing.
Okay.
That's good, isn't it?
It is good.
Whole life goes with you your whole life. That's why they call it whole life.
Okay.
Whole life also grows a cash building value.
Right.
So as you make your premium payment, a portion of that premium payment has a savings account attached to it.
Yeah, that's like mine.
And it has a fixed interest rate, usually between 4.5% and 5%. Now, that cash building value, remember we told you earlier that we want to be able to teach you how to own your policy?
Right.
The real purpose of that cash building value, Keith, is so that later down the road, as that cash building value accrues, you can turn that cash value in for a paid-for policy. The higher the cash value is, the higher the paid-for policy. So the longer you keep it, the more of a policy you can own.
Okay. Yeah, that's the type I get. I have one of those. That's what I have.
Then the next thing is about the cash value. If you get into an emergency financial jam, if you need to,
Borrow from it.
you can borrow from it. I didn't say you can get it out, you can borrow from it.
Yeah, I did that one time.
It's best not to do that, but you could if you wanted to.
Yeah, I did
Okay.
that once.
Now, the nice thing about the state-regulated living programs, living benefits that are attached to the whole life plans, remember we talked about living benefits? Well, let me tell you what a living benefit can be if you're eligible for it. As we live, the older we get, the probability of us needing a caregiver at some point in our time increases.
Don't want to think about it.
My mom, unfortunately, at the age of 72, needed a caregiver. Okay. So But nobody that I know wants to go to a nursing home if they don't have a caregiver.
No.
Okay? So what I mean by that is this. Let's say, for example, that you're in a position later in life that you can't take care of your daily living activities, such as eating, toileting, bathing, things like that. And you need somebody to be with you to help you with those things. Well, let's say there's not anybody. Let's say there's a family member, but they'd have to quit their job in order to do it.
Okay.
Well, let's say you don't have the money to replace their income.
Okay.
They probably wouldn't be able to quit their job and do it at that point in time. So you'd be facing going to a nursing home.
Yes.
Yeah. Well, are you aware that when you go to a nursing home, you literally have to give up all your possessions? You cannot own anything more than $2,000 worth of value.
Did not know that.
That's true. And I don't know of anybody that wants to go to a nursing home and eat cafeteria-style food, smell your neighbor's messy underwear,
Yeah.
hear them burp and cry and snore in their sleep.
Yeah.
Everybody wants to sleep in their own bed, eat their own food, watch their own TV,
Yeah.
and so forth.
Yes.
Well, that living benefit, if you had a policy that you're eligible for with a living benefit through a state-regulated plan, would allow you to get all the money from your death benefit while you're living, so you could use those funds to pay for a caregiver. That's good, isn't it?
Oh, yeah. Okay. Yeah.
Yeah. So that's a living benefit there.
Okay.
Now, again, I don't know if you'd be eligible for something like that, or even if your program has that. There's only a couple of companies that actually have 100% living benefit inside their policy. And that's a free service. They don't charge for that.
Okay.
Okay. Now, the last type of life insurance I want to talk about is called a universal life. It's also called a flexible premium adjustable life.
Okay.
Now, unless somebody has one of these, I really don't go into a lot of detail, but let's just say this. If term life and whole life got married and had a baby, we'd call it universal life.
Okay. All right.
Because it's part term and it's part whole.
Okay.
Well, remember I told you that there's 3 types of terms?
Yes.
Called an annual renewable term is the second one.
Yeah.
That's the type of term that they borrowed from to put together to make the universal life. Remember I told you that whole life grows a cash value?
Yes.
That's the part of the whole life they put together. So they have a term that goes up each year, and they have cash building value that is tied to the present interest rates instead of having a fixed rate.
Okay.
But usually, because it's term, it's a real sneaky kind of policy, because each year that premium goes up, you don't pay the difference as it goes up. You only pay a certain amount, like in the beginning.
Okay.
But as it goes up, they take the difference from your cash value. So the longer you keep it, the longer you live, then when that cash, as that premium gets real high, the difference between what you're paying and the real payment is taken from your cash value. So when the cash value goes to zero, then you wind up having to pay the higher payment. I've seen them get as high as $600-700 a month overnight. I was with a lady one time who was paying $40-some a month for 18 years. And all of a sudden she had to start paying $630-some a month.
Good gracious.
To
What'd
keep,
she do?
she just wound up canceling that, and hopefully we rescued her and put her into a more permanent plan that would never do that. So we rescued her from that problem.
Okay.
That's universal life.
Okay.
Now, in summary, you got term life,
Yep.
whole life, universal life.
Yep.
Term life is only good for a certain number of years,
Yep.
then it expires, and you got to start out all over again. 3 different types of terms:
Yep.
level, annual, 5-year renewable.
Okay.
Whole life has all the whistle and bells.
So that's what I have.
Okay? And then universal life is the one that sneaks up on you and winds up blowing up and defunding.
Right.
Okay?
Yeah.
So, which one would you pick? Would you pick term, universal, or whole?
Oh, the whole life.
Exactly. Why would you pick the whole life?
Because it's going to last the whole of your life. It builds
Exactly.
cash value.
Exactly. Now, let me ask you a very important question you probably may have thought of. When that time comes and God calls you home, do you want to be cremated or buried?
Oh, buried.
Buried. You know, most people do, but there are some people that don't mind being cremated.
Yeah.
But, do you know how much a funeral costs today?
I think we had to bury someone recently. It was about between $8,000 and $10,000.
Yeah, the average cost of a full-blown funeral today is around $10,150. I'm not gonna go through all these little things here, but you can look at them. But you wouldn't want your children to bear that problem financially, would you, if something were to happen to you?
No.
No. And you definitely wouldn't want a tombstone like this. Can you read that out loud for me?
To my family, I'm sorry. I was too busy, cheap to buy life insurance. Your dad.
Well, it's funny, but it's not really funny, is it?
No, it's not.
No, okay. But you know, you're not planning on that. That's what the average cost of a funeral is today.
Yes.
But you're not looking to die today, are you?
No, no,
You're planning on living a long natural life, right?
Yes.
Well, let's take a look at what an average long natural life is for you.
Okay.
You trust the Social Security Administration?
I can't say that I do, but it's probably the best one we have.
Well, for right now,
Yes.
yes. Of course, Social Security is not designed to be a retirement plan. It's designed to be a supplemental income
Right.
in the original years.
That's right.
It turned out to be a retirement program for many.
Right.
But are you aware that the Social Security Administration, they keep up with the numbers of what the life expectancy is for people today? Because when people are born, they got to issue a card.
Yes.
When people die, they contribute a couple $100.
Yes.
So they know what the numbers are.
Yes.
And they compile all these numbers into what they call actuaries.
Right.
So they also, believe it or not, they keep up with the projected funeral cost in America today.
Okay.
And they get that projection from the Funeral Directors Association of America.
Okay.
So if we come over here to this chart, which comes from the Social Security Administration, come over to a male, and how old are you? 50 what?
57.
57. So on the average, an American male today at 57 years of age has an average life expectancy of 22.77 more years,
I did not like
which would
that.
put you about 79 years of age. Now, Keith, God bless you, I hope you live to be 99 years old.
I am going to live.
Okay. However, if you look at the projected cost of a funeral by that time, the projected cost of a funeral is $27,521.
Right.
So a $10,000 policy is not going to do you much good, is it?
No.
No. So you're going to need at least this much, maybe a cushion, because if you live longer than that, it's going to cost more. Okay? Are you with me?
Yes.
Okay. Now, after learning everything that you've learned today, and you've got a policy, now I'm probably thinking you've got with what you're paying with the amount of coverage, it's probably a term policy, not a whole life policy. Or do you get a report one time a year called an annual report?
I do. That's why it's a whole life.
Okay, I'll talk about that in a minute. Okay. But do you think that you and your family are prepared financially
Yes.
for the future? Okay. Well, let's talk about that annual report for a moment.
Okay.
Okay. The only type of insurance policy that sends an annual report one time a year is actually not a whole life plan. It's the universal plan. And here's why you get that annual report. The annual report tells you that for that year how your cash value is performing against the cost of insurance.
Right. Yes.
Okay.
My agent told me that it was like a whole life. And I could
Like a
see-
whole life.
See every year how that cash is growing.
Yeah, so, but how the cash is growing, but it's also going to show you how the cash is defunding when it gets to that point. So let me explain this to you, okay? In better detail, now that I know you get an annual report. In the beginning, you're paying $50 for $100,000, okay? And you've been paying for how many years now?
Well, I'm paying for about 15.
About 15 years, okay? Well, the reality of it is, because it is a flexible premium adjustable life, you're paying the $50, but the real cost of insurance has gone up each year. The interest rate is so low right now, okay, that the cash value can't grow faster than what the cost of insurance does. Cost of insurance being the premium, the monthly payment. So what happens is, in your policy, if you were to go get it, there's a schedule that says cost of insurance per 1,000. Alongside of that, it has your age. At age in the beginning, at age it is now, and the future ages. And there's a factor number beside that age. Well, you have $100,000 worth of coverage. That's called 100 units.
Okay.
Okay, so you take that factor number and multiply that times 100, and that'll tell you what the real monthly payment is.
Okay.
Okay. So now, let's just say that I'm looking at your policy here, and you're 57 now, but at age 75, that factor number probably, looking at it here, could be, 9.33. So 9.33 times 100 is how much?
$933.
And $33. So that means your real payment is $933, not $50. So it doesn't take
Well, that's not what he told me. He said, I'm good.
You're good for, he'll tell you things like, Keith, you're good as long as you make your payment.
Yeah.
But he didn't tell you what that payment was gonna be, did he?
I'm gonna have to call him.
Well, no, instead of calling him, let's do this for a minute. Let's call your company up, the actual company up, not him, and get some answers from them. But before we do that, okay, can you think of a reason not to protect your loved ones, Keith?
No, I cannot.
You know, your 6 children there, your grandchildren and so forth, who you ever want to be your beneficiaries there. Well, we want you to be able to protect what you cherish the most.
Yes.
So let's get started now. Tell us a little bit more about your situation so we can find a solution for that. Let me ask you this, how's your health today?
I'm in good health.
You're in good health. Let me ask you a few basic questions.
Okay.
Do you smoke?
No.
No. Do you have diabetes?
No.
Do you have any heart disease? Or
No.
have you ever had heart disease or heart surgery? Okay. Do you have any type of lung respiratory concerns? Okay. Do you have any cancers in your past? Do you take any medications?
No.
Well, I think that, you know, with what you've just told me, between the annual report and with your health conditions, you would be eligible for a preferred premium state-regulated whole life plan with the living benefits. Why don't you go grab your policy real quick and I'll show you in there
Okay.
where that's at.
Okay.
Okay.